Welcome back. Markets doing well, but as promised, let's get going with a chat with Mr. Rajiv Kaul, the Executive Vice Chairman, Whole-Time Director and CEO at CMS Infosystems to discuss the past quarter's performance and the way ahead. Hi, Rajiv. Good morning and good to see you in as always. Well, FY25 was a year of consolidation. It's a perfect storm going by what your press release says. Just a single-digit growth is what you all did in FY25. What's the revenue guidance for FY26? And give us some color as well. How much can managed services contribute from around this 37% odd mark? And give us a hint about how AIoT as well did in the past year. Go ahead. Revenues, mix, and AIoT.
Thank you, Nigel. Mangalam, good to see you again. I don't know what the karma is in my interviews with you, but it always happens around cricket or IPL. So, and I also was reflecting, I think when we started CMS in 2009, 8-9, that was the first year of IPL. So it's actually been 17, 18 years at CMS, along with the IPL editions, the way it's been sort of panning out. Coming to your questions, Nigel, I think for us, last year was a year of modest growth. I think we alluded to a set of unforeseen events. However, what was in our control, I think we've done a very good job in execution. We've gained market share across all our businesses. Our market position is strengthened across, again, all of our 7 lines. We entered the year with a very strong balance sheet, maintained a strong margin profile and high return ratios. Coming to the next 2 years, basis the order book we have and how we think about executing this, we have a strong opportunity to grow our revenue CAGR at 14 to 17%. I'm talking about FY25 to FY27, right. Which is sort of historically, our revenue CAGR over the last 17, 18 years is roughly in that range. So we hope to aspire to be back at that trend line, despite the little dip we had last year in line with the broader economy in India.
What about the mix? How much can managed services contribute as a percentage? And AIoT, that was a small vertical that was growing at a faster clip. Where have you reached?
So our managed services business unit, which is roughly 25% of our revenue about 5 years ago, is already at 40% revenue contribution. We hope this will inch up and grow rapidly to almost a 45% contribution in the next 4 to 5 quarters. From an AIoT, which is our Vision AI business, which right. we incubated in 2021 and did a couple of small acquisitions after that, it scaled very well. We have given a guidance already that a broader software business and including Vision AI should contribute 10% of revenue by FY27. At the end of FY25, it was already at 7%. And I think we're tracking very well to meet that estimate.
You know, you spoke about the asking rate, you spoke about the IPL and the asking rate. If you look at 14 to 17% CAGR over the next 3 years basis, what you've guided so far, at the lower end, you would actually not meet your FY27 aspiration of 3,800 crore on the revenue, but at the higher end, you might beat it to around 3,900 crore. So we'll keep that as it were. You did allude to market share gains in the 4th quarter. If you could give us a sense on where your market share was in the ATM business, you were targeting 60%. Have you reached there? And even the split, cash and managed services, where does that number stand at? What's your aspiration here?
So, Mangalam, thank you. Tough question as usual. Let me remind you that this was an aspiration we set on FY22. Having said that, we still have 2 years left, and we will obviously try our best to make sure that we can get to not a target, but an aspiration. In terms of when I look at our market share, not just Q4, I think the entire year, in our cash management related businesses, we have gained almost 200 bips in market share. Now, keep in mind that we are already the market leader with a significant gap to a number 2 player, but we still got a 200 bips increase in market share. In the managed services space, where we used to be amongst the top 5, we are now amongst the top 3 players in India. And maybe in the next 1 to 2 years, we'll be in the top 2. So I think the market share, market positioning is improving dramatically. I think the market is also seeing consolidation. And that consolidation will lead to growth opportunities for stronger and end-to-end integrated players. And right now, I think in the sector, there are only a couple of people who have a variety of service offerings which meet the needs of our client set.
Okay. So for the cash logistics segment, then your market share, if it's a 200 basis points improvement, would stand somewhere close to 45%?
It should be about 44-45%, Ekta, yes.
44 to 45%. And the aspiration to 60% still stands?
Aspiration, no year set for it right now.
All right, this managed services and technology space, give us a sense in terms of the order win, considering that majority of your revenue is actually from the reoccurring business segment. Tell us what you did this quarter and what are you executing?
So H2 in FY25 was 800 crores of wins. Q4 was 500 crores of wins. We have a pending order book to execute, which we hope to finish by September of this year. We are roughly at about 52% execution done by March, and we hope to get to 100% by September.
Okay, all right, Rajiv, for this year, will it at least be double-digit growth? I get that 14-15% over 2 years as a CAGR. But for this year, could it be in, it will be mid-teens?
We don't want to come and bat in the last 5 years. We want to be going out strong and make sure that we can be consistent in all the quarters.
Okay, all right. Just a couple of more questions. In the past year, what was impressive is the OCF upon EBITDA. That number went up, I think, to around 75%. Will you be holding to maintain it at these levels? And since the business is throwing up a lot of cash flows and you're already sitting on 1,000 crores, me and Mangalam tried to get this out of you last time as well. Inorganic growth. You said possibly. Nothing seems to have worked out, at least as of now. Should we hear about something in the next couple of quarters?
You guys should know me better, but let me go back to the main question. I think our last 3 years OCF has been above 70%, right? So yes. 71, 73, 76. I think we'll aim to maintain at that level. Just the quality of the business, I think, is strong. The second thing to note is that we've maintained a fairly high PAT margin profile at about roughly above 15% again for these 3 years. 2 of those years were at 20% revenue growth. 1 year that had only 7% revenue growth. But across those 3 years, we have been able to manage with technology investments, automation to maintain a high margin profile. From cash and books, I think what we've got a very robust balance sheet. We've been building this up and waiting for the right opportunities. A lot of effort around organic and inorganic growth. I think we have a trend line of roughly investing about 200 crores on capital per year average, if you think of chunks of time. And from an M&A perspective, while we can't predict what will happen and when, but I think as a team, we are very sure that, one, it has to be aligned culturally to what we are as a firm. Secondly, it has to be synergistic with not only our businesses, but our earnings. And given how frothy IPO markets were in the last year, or a majority of the last 1 year, I think it was better to wait and watch. I think it's a fantastic asset to have with us right now, as we scan the market and look to engage in conversations with founding teams of becoming part of the CMS network.
Just a final question. How many touch points do you, intend to reach this year? I remember the last number was close to 150,000. What's the target for FY26? And how many ATMs come up for renewal? How many ATMs get added?
So I think for us, when we look at our touch points over time, we'll have to start defining touch points a little more broadly and not just cash management. I think one thing which you should track is really how we're doing in our Vision AI business. Vision AI business was roughly 25,000 sites live end of last year. We aim to double it in the next 3 to 4 years. So get to at least 50,000 sort of sites there. In our cash-related businesses, we are at 150,000 touch points. I think that we will look to get to 160, 170 in the next couple of years. I think fundamentally, I'll go back to what I keep repeating, revenue growth, margin profile, market share. All of these 3 is what we need to keep balancing as a management team every year. I think last year we got market share and margin profile. I would tick the boxes of that.
Okay, all right, Rajiv, thanks a lot for joining in. Wishing you all the best. We look forward to chatting up with you as the year progresses. I'm going to be watching the IPL game at the stadium. I try to get my mind off it, but seems you have diverted my attention yet again. Thanks a lot for joining in. We'll track you to all of these numbers. Well, we've completely run out of time on Bazaar, though. Stay with us. Chartbusters comes up next.